Morning, guys. It's Wednesday, October 22nd, 5:24 a.m. Central Time. Grain markets are mixed to higher this morning. December corn futures up a half cent at 4.20 and a quarter. November soybeans up 3 and a quarter at 10.34. December Chicago wheat down a 3/4 of a cent at 4.99 and a half. December Kansas City wheat down 3/4 of a cent at 4.84 and a quarter. December spring wheat up a half cent at 5.45 and a quarter. We got some news out of USDA yesterday. Why don't we start there?
USDA Secretary Brooke Rollins announced that beginning Thursday, USDA will restart core Farm Service Agency operations, including critical services such as farm loan processing. Agriculture risk coverage, price loss payments, and other programs will also resume, with all FSA offices set to reopen. The services have been suspended since the government shutdown began 3 weeks ago. Rollins also stated that the administration will soon unveil additional support measures for farmers affected by the U.S.-China trade war.
This is one of the few positive things with regard to ag that I've seen come out of the administration recently. It seems like we've seen just a lot of bad stuff. Like the Argentina stuff had a very bad look. The trade war with China is starting to have a very bad look. Brooke Rollins was on CNBC yesterday. Let's listen to what she had to say.
Farmers don't want checks from the government. They want to be able to sell their product. And again, this short-term, bridge that we're building to get us to the next phase. All of these trade deals that the president has struck, every one of them will really begin to move into effect beginning next year. But why these loans are so important and this aid is so important right now is why these soybeans are sitting, in piles waiting to be sold while we're waiting on China and other markets. They are already planning for our farmers what they're going to do next year, what they're planning.
Farmers want trade and not aid, and that's correct. We've done surveys. We've had lots of responses. Farmers would rather have trade and markets than more aid. But guess what? They're going to get aid. That's basically what she said yesterday. You can expect this package, whether it's an MFP style package or an ECAP style package, it's going to be $10 to $15 billion off the bat would be my guess. And that lines up to kind of what we've seen in previous administrations. I think it's going to be an MFP style program that's announced, which means that the government will pay probably on a per bushel basis, and they're going to pay for crops that they believe were impacted by the trade war. As I've mentioned in the past, if I was forced or tasked to put this thing together, that's not how I would do it. I believe that the weakness in the soybean market, first of all, predates this trade war. Soybean prices for new crop delivery were weaker a year ago, at least on the board, than they are today. So I believe that because of the weakness in the soybean market over the last year, soybeans have helped to drag down other crops through acreage. We planted a lot less soybean acres this year, and therefore we planted a lot more corn acres. So you could also argue that, hey, corn's been affected by all of this. It's just the weakness in the farm economy has a lot more to do with it has to do with other things than the tariffs. And the tariffs are absolutely responsible for the weakness in the soybean market, or at least some of it, but not all of it. So I would do more of an across the board payment, but we'll see what happens. It's coming. So, I mean, I'm happy that the FSA is going to reopen. The direct payments, of course, are a double-edged sword. They're going to keep farmers in business for another year, but they're going to result in continued input price inflation, which is something that we've discussed a lot. High inputs, high cash rents, all that stuff. It makes it very, very difficult for farmers to turn a profit without some sort of crop scare or drought or big weather event. Makes it really difficult.
President Trump and Xi Jinping's upcoming meeting remains uncertain. On Tuesday, Trump expressed optimism that the meeting could produce positive trade outcomes, though he acknowledged it may not come to fruition. The two leaders are expected to meet at the end of the month in South Korea. If the meeting does in fact occur, the resumption of U.S. soybean purchases by China is expected to be on the agenda. Treasury Secretary Scott Bessent will meet with Chinese officials this weekend to prepare for the Trump-Xi meeting and to also attempt to de-escalate trade tensions.
This is not really a story. I found the exact transcript of what Trump said yesterday. This is the exact quote. I have a great relationship with President Xi. I expect to be able to make a good trade deal with him, and he'll make good. I want him to make a good deal for China, but it's got to be fair. For years, they were making $500 billion, $600 billion, $700 billion, and we'd be making nothing. It was one-sided. Honestly, we built their military. We built China's military with the money that we lost for so many years of getting ripped off. So now we're going to have a fair deal, and I think we're going to have a very successful meeting. Certainly, there are a lot of people that are waiting for it, and maybe it won't happen. maybe it won't happen. That's what he says, all this positive stuff. And then he says, oh, but maybe it won't happen. So as Trump does, he was just talking. I don't know that this is a story. The Scott Bessent meeting with Chinese leadership in Malaysia is supposed to be sometime this week, and there's not a date nailed down. Most recently this morning, I read that it's going to be Sunday now instead of like this week. So we'll see what happens. But I think the soybean market is waiting for a headline out of that meeting.
According to U.S. Soybean Industry Groups, there are currently no new sales to China, and nothing is expected to be shipped in the coming weeks. Harvested soybeans are being stored instead of moving to export hubs due to the lack of sales. China has shunned U.S. soybeans amid the ongoing trade war and has instead relied more heavily on South American supplies. While U.S. storage capacity is sufficient for this season's crop, prolonged trade tensions could create a shortage if the crop must be carried into next season. Farmers are awaiting financial assistance from the Trump administration. That, of course, has been delayed due to the government shutdown.
I'm not an expert on lobbying. I'm not a lobbyist, but I feel like these soy industry groups, they make comments, they put out, strongly worded letters, but have they done a whole lot beyond that to try to push the administration into some sort of deal? I don't know. I don't know how. I don't know what the function is that they're serving the farmer right now, other than, hey, yeah, we're saying stuff. But I feel like it's got to go beyond that. And I've said that before. I feel like the time for strongly worded letters and comments is probably past, and that maybe you need to get a little bit more aggressive. What that is, I don't know. Ask a professional lobbyist how you get things done. But I don't know what the solution is. I just don't think that this is it.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video with Ryan Moe?
Ryan Moe was on yesterday. We talked about some basis stuff, which was really interesting this year versus last year, corn and soybeans. There was some stuff that was kind of shocking to me. And then Ryan had some really great information and one absolutely insane statistic with regard to free DP. We had that story about ADM and Decatur last week and how they're doing free DP on soybeans until September of next year, which is crazy. But some of the stats and some of the stuff that Ryan rattled off and some of the ideas with regard to free deferred or delayed pricing, super, super, super interesting stuff. If you guys are thinking about free DP or you've done it, this is a video that you need to watch. If you want to see the premium stuff, guys, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody tried to sell you anything else. We don't want to do your brokerage business. We don't want to sell your crop insurance. We don't want to talk to you at all. We want to put you on our email list, send you out our stuff. You can be on the text message list if you want to. It's optional. You can reply to the texts if you have questions. You can reply to the emails, but we're never going to bother you with anything except for the emails and the texts that go out a couple times a day. Give that deal a shot this morning, guys. Again, I know you're busy. If you're in the combine, you're in the truck, all this stuff is super easily accessible on your phone. You can sign up on your phone in about 20 seconds. Apple Pay, Cash App, Google Pay, credit card, all of that stuff works. Give it a shot this morning.
The Trump administration will soon unveil a new plan to bolster U.S. beef production. According to USDA Secretary Brooke Rollins, the plan will open up additional acres for cattle production, aiming to make it easier for new ranchers to enter the industry. The administration also plans to build more processing plants. The goal, Rollins said, is to expand the U.S. cow herd and, in turn, help lower beef prices for consumers. The announcement follows strong backlash from the cattle industry after President Trump unveiled plans to increase Argentine beef imports to help reduce domestic beef prices. Rollins confirmed that the import expansion will still move forward, though the increase in imports will be minimal.
Okay, so are people in the cattle industry going to be opposed to adding land? And if so, where's the land coming from?
Nope, this is a fantastic idea. I think across the cattle industry, everyone will be open to this. And in the article, it talked about opening up more BLM ground along with forest service ground for additional cattle grazing. So this is what should be announced from the get-go. The Argentine thing should just totally be forgotten. This is great for cattle producers across the board. And then also more processing plants. That's also fantastic. It will take a while, obviously, to get those up and going. No doubt about it, but more processing, more packers out there always helps the industry.
So this is something that, if implemented, will take years to affect beef prices.
Yeah, and that's the other thing. Like when you talk about opening up more land for cattle grazing, obviously it takes time to get those animals there on the ground, and we don't have the numbers right now. So yeah, this is a long-term plan, no doubt. But in my opinion, this is the correct plan and the one that would probably work the best.
If new land becomes available, it'll be ranched by existing ranchers, or are they going to try to get new people into the business? Because that's going to be tough to do.
Right, exactly. And she stated that the plan would hopefully get more new ranchers into the business.
Yeah.
But as we have talked about before, input costs are so high. It is so hard to get into the
Yeah.
business. Maybe there will be other aspects of the plan that will help young people come back into the industry, but we'll just have to wait and see how it all plays out.
Interesting stuff. All right, we got some wheat news.
We sure do. The outlook for Russia's wheat crop this season has slightly improved. Russian consulting firm ICAR now forecasts the wheat crop at 88 million metric tons, a 1% increase from its previous estimate. Total grain production is projected at 137.3, also down 1% from the prior forecast. Russian wheat exports have started the season off slow. According to S&P Global, exports from July through September fell 18.4% year over year, reflecting reduced demand from key importers and increased competition in the global market. Wheat futures continue to struggle as they face pressure amid ample global supply.
If you guys are squeamish, close your eyes. I'm going to put a wheat chart on the screen. Wheat has lost nearly $9 per bushel since it peaked in 2022. And oddly enough, or perhaps ironically enough, wheat rallied to $13 and change in Kansas City futures in 2022 as a result of Russia, Ukraine, and the invasion. And now the wheat market is selling off because Russia has this big crop and they're the world's top exporter. And the export flows out of the Black Sea never really stopped. This has been really ugly for a long time. We've been trending lower for the better part of 3 years now. It's ugly, and I don't know what the catalyst is for a rally. You're going to need to see some sort of short covering event. Most traders that I've talked to seem to think that, hey, the U.S. weather situation is kind of benign. Russia's got a good crop. Exports are going to be good. There's just not a story here.
Precious metals suffered their largest daily declines in years on Tuesday. Gold futures dropped as much as 6.3%, settling around $4,105 per ounce, marking the biggest single-day loss since 2013. Silver fell 8.3%, recording its largest daily decline since 2021. The sell-off was driven by easing U.S.-China trade tensions, a stronger U.S. dollar, and technical indicators signaling overbought conditions. Analysts view $4,000 per ounce as a key support level for gold. Despite the pullback, Wall Street remains bullish, with Goldman Sachs projecting gold to reach $4,900 per ounce by the end of next year, and JP Morgan forecasting gold could climb to $6,000 per ounce by 2029.
Pretty nasty sell-off yesterday. To see a 5 or 6 or 7% sell-off in any commodity is a damn big day. But gold has had a hell of a run. It's still up more than 56% year to date, even after yesterday's sell-off. So when you have a rally like this, it's just like the cattle market. You're going to see nasty corrections kind of during the rally. Silver, very similar, down 7% yesterday, up almost 64% year to date, which is pretty crazy. I threw together this chart this morning. The debasement trade. There's been a lot of talk about the debasement trade. Hey, the stewardship of our currency is very poor. Therefore, we need to own things that are priced in dollars that will rally as the currency's buying power erodes. Bitcoin has been leading the charge, up more than 1,000% since the start of 2020. Gold's up 161% since the start of 2020, not too shabby. Silver's up 167%, and the S&P 500's up 108%. There's a lot of other things you could throw in here. You could throw real estate in here. You could throw farmland in here. The exceptions would be corn, soybeans, and wheat, which have had no inflationary impact whatsoever, except for the input costs, from what I can tell. What did cattle do yesterday?
Cattle futures were higher. Live cattle were $1.17 to $1.82 higher. Feeders saw gains ranging from 47 cents up to $1.17, with the exception of the front month contract, which lost 2 cents. Box beef prices were mixed. Choice was up $2.75 at $371.93, while Select was down 89 cents at $352.57.
S&P's up 8 points. The Dow Jones is about flat. Treasuries are mixed. U.S. dollar is up just a little bit. Crude oil is up 77 cents at 57.93 in the January WTI. January WTI. Have a great day, guys. We'll be back on Thursday